Hello, and welcome to Pitt Street Research. My name is Stuart Roberts, and I'm one of the co-founders of our firm. And joining me on the morning of Monday, the 8th of December 2025, is Dr. Fraser Tibet, who's the CEO of Alma Metals, ASX ALM. Dr. Tibet, good morning.
Yeah, morning, Stuart. How are you?
What did you get your
Not very
PhD
often I get called doctor, so
in? What's your PhD in specifically?
it was on a high-grade gold system in Zimbabwe. So it was not quite directly related to what I'm doing now, but certainly in geology. So
Right, right. Proof that most of what you do at university isn't relevant to what you're doing at the time.
that's
And
correct.
and you did kick around in Africa for a long time, but we're going to
Yeah,
talk about the Alma's Briggs copper project in central Queensland right
yeah,
now, which is
yeah,
the arguably the company maker for Alma. You've got 51% of that, and you can earn 70%.
yeah.
And this is astounding. We've got 2 million tons of copper in situ. So massive project. The economics of the project are looking very attractive, given what you've talked about the flow sheet there. Talk to us about how Alma lucked in on such a great project.
Yeah, it's essentially through some of our shareholders that were also shareholders in the joint venture partner, Canterbury Resources. And, they knew that Alma was looking for a copper project. And they also knew that Canterbury was looking for a partner that had the ability to raise some money and could bring some technical, not so much copper expertise, because Canterbury certainly got that, but certainly, some experience with developing projects, which is, what the board of Alma has. So we went and had a chat, and I did a site visit in I think it was May 2021, and I was just super impressed. It's very rare these days when you can walk out into the field and you can walk for 2 kilometres and you see mineralisation all the way along that 2 kilometre trend, and it was clearly a large porphyry system right at surface, and albeit low grade, but given its location, given how close to surface the deposit is, then it's certainly something that really piqued our interest. So
Yeah.
that's sort of the background.
And you can chalk yourself and the team up with a bit of foresight here. As we speak, copper's changing hands in New York at about $5.40 a pound US. That's got to
Yeah.
be good for your economics.
Oh, absolutely. I mean, we ran our scoping study on sort of more conservative numbers than that, as you tend to do, and as many of these low grade deposits are, it's very highly leveraged to the copper price. So those numbers, it would look as a very, very attractive project, and we see long term, those numbers seem to be quite realistic. There's a huge increase in demand for copper, and there's a massive amount of supply side constraints that we can see for the next 1, 2, maybe 3 years. So something's got to change in the copper market, and that means you need more deposits coming online. But these deposits take longer to permit. Grades are definitely dropping, and that means copper price has to go up to incentivise those projects. So this positions Briggs really nicely, and it's something that the board and management of Alma have held a long-term view on. All of our board members have been associated with the copper industry on and off for up to 25 years. So, we've seen it, go up and down, but, we think this is one of those great thematics that's, a copper super cycle that we're currently in and is likely to go for some time.
Absolutely. The location, as you said, is exquisite. It's only a couple of hours drive from the port of Gladstone, which has got to
Yeah.
be good. Obviously, Queensland's good for all of the necessary infrastructure, and I'm pretty sure the power line's running pretty much next to your property. So you've got everything in
Yeah.
there.
Yeah, exactly. Yeah, in fact, it's well under 2 hours. We can drive from the project and be at the airport in Gladstone in literally just over an hour.
Right.
And with some improvements to that road, I'm sure we could get it down to an hour. So drive in, drive out type workforce scenario when this thing goes into production is very realistic. Obviously, Gladstone is a huge industrial port complex. There's multiple alumina refineries, smelters, coal export terminals, liquefied natural gas export terminals. So it's a happening place. And then 50, 60 kilometres in the other direction from the project, you're into the coal field. So you've got access to highly skilled workforces,
Right.
and you've got, as you said, all the infrastructure you would need on a road, a railway, multiple gas pipelines, multiple 275 kVA power lines, all pass within 10 to 15 kilometres of the project. So when it comes to building this, there are going to be some significant savings on the upfront capital costs required to get all the infrastructure in place, because most of it's already there.
Right. And what's impressive to me is obviously low grade. We're talking that 2 million tonnes is in a 0.25% copper system, and most of that's inferred. So we've got a bit of work to do to upgrade that. But it's multi-commodity. We've got some molybdenum and some silver credits coming your way.
Yeah.
What really made me jump out of my seat when I was looking at your most recent presentation is the flow sheet. A couple of grinds, a single grind, then an early float, then another grind within a flotation system. You're going to be disappointing a few metallurgists because it's not all that challenging to actually make money out of this, given the flow sheet you've got.
You just see the grin on his face when he got the first results, though. Metallurgists, they love complexity, but they also love simplicity, and this really is simple, as you said. It's a very traditional crush, grind, float process. The key for us, as you alluded to, is certainly in the preliminary grind, when you're doing your rougher flotation, which is where you float the bulk of, in fact, you float all of the mineralization, or you try to. And the goal there is to reduce the volume by as much as possible, retaining as much of the copper as possible, and doing that for the least amount of power consumption possible. And that all comes down to grind size. If you can do that with a very coarse grind size, then your power costs, which are the biggest single cost of this whole process, are reduced significantly. And that's exactly what we've demonstrated with our work. We're showing we can do we can get about 95% copper recovery at a 212 micron grind size. And just for context, that's close to sort of double the grind size that would be normally used for these types of systems. And that means a massive reduction in the amount of power required. That will have a positive impact on lowering the overall operating cost. And that's one of the keys for being able to operate a low-grade copper deposit. There's a number of deposits of similar scale and grade that are operating in Canada highly profitably. And in their case, not because they're doing particularly coarse grind size, but because they have access to low-cost power through, hydro power schemes.
Right.
So it's all about doing that. Now, in Queensland, we don't have particularly cheap power, but it's not particularly expensive either. So for us, if we can get away with that really coarse grind size, then happy days. We've got some work underway that's potentially looking at increasing that yet again with further cost-saving opportunities on those operating costs.
Right. How close to surface is the Briggs ore body? And following on, what kind of strip are we talking about here?
Yeah, look, it's right at surface. There's between sort of 10 and 30 metres of oxide material on the top, which at the moment we've excluded from any mining schedules that we've assessed. But during the pre-feasibility study, we'll certainly be assessing whether that can be economically recovered. And then the bulk, everything underneath that is sulfide mineralisation, and that's what would be going through the concentration plant. Right. And so that leads to very, very low strip ratios. We're unable to publish those at the moment because we don't have the enough JORC indicated resource to give us the confidence to be able to do that under ASX listing rules. But certainly we're seeing, in our early work, very, very attractive strip ratios. And again, that's a key part of making these low-grade deposits work, because you're not having to move a great deal of unmineralised material compared with mineralised. So it keeps your overall costs down.
Right. So presumably 2026, you're going to work to upgrade that resource into the measured and indicated category mainly. That'll be a good first step. We've got a scoping study out there at the moment. And we'll move presumably to a preliminary feasibility study. What else can we expect in 26?
Yeah, well, look, I mean, the major part of that pre-feasibility study, which will take probably 2 years to complete. The first year of that is going to be very much focused on infill drilling. So there'll be a lot of drill assays coming out. That'll improve our geological model. It'll improve our resource estimation block model. Huge amount of news flow associated with that. And we'll also be pursuing some of those opportunities through the MET program. So looking at, ultra coarse particle flotation, which could, as I said, potentially reduce those operating costs even further. So those will be, the two main sort of focal points for 2026. And then towards the end of 2026, we'll start working on the other technical aspects of the pre-feasibility study. So that's when we'll start bringing in the mining guys to look at scheduling and design, etc. I mean, it's a simple deposit, simple geometry, simple type layout. So a lot of the complexity in pre-feasibility is often when you're looking at multiple options and doing trade-off studies. We don't see that we're going to have to be doing too many of these in this. Probably the only trade-off study we're going to really look at will be whether we add a molybdenum circuit on the back end or not. And that's a fairly simple trade-off study. And I think we already have a pretty high confidence the answer is yes, it will be worth doing, but we've got to demonstrate that.
Right.
So it's a pretty simple year next year. It's really, drill, and get those studies underway. There'll obviously be a resource update at some point next year, and that may allow us to then actually, release more information of the scoping study level numbers once we get that indicated above the critical mass. And then obviously another update when we finish that drilling program, which probably take us 18 months or much.
Right. Talk to us about the regulatory requirements at the moment. Obviously, there's going to have to be some more environmental work going forward. What can we expect there?
Yeah, so we'll start our baseline studies sometime next year. So, particularly looking at the water. So, looking at what aquifers we have, looking at seasonal variability in those aquifers in terms of where they are, what sort of levels below surface, what their chemistry is. So that we'll get that definitely underway. So we need at least 2 years of those baselines before we can apply for any of our permits. We've got a pretty detailed sort of permitting pathway that our environmental consultants put together for us about 12 months ago. So we'll engage with them again early in the new year and get them to help us get those baseline surveys underway. So all up, the permanent pathway on a project of this scale is, sort of a minimum of 4 years, maybe a little bit longer. And that sort of ties in quite nicely with our sort of 2 years of pre-feasibility, maybe 12 to 18 months of definitive feasibility study, and then sort of 12 months of putting that all together, reaching an investment decision and getting a project funded. So 4 to 5 years from now, you'd hope to have all the permitting in place and be ready to make that final investment decision.
Good times. We alluded earlier to part of your career is, and in fact, a fair bit of your work at Alma over the years have been spent in Africa. This company was a coal play based in Botswana prior to the decision to pivot. Talk to us a bit about your journey up to that time.
Well, yeah. So I sort of started my career with Western Mining in Kalgoorlie. I had 6 years working there on gold and nickel, and then Western Mining sent me to the Philippines to learn a bit about copper and gold, and that's where I sort of kind of fell in love with porphyry copper systems.
Right.
We were working a great system there called Tampakan, which is on the island of Mindanao. So I sort of cut my teeth on those systems. Right. That one's very, very high up in the system.
Yes.
But then, I had some great mentors there that, we did a lot of work around the Southwest Pacific, and sort of some of those mentors, helped me understand how you work out where you are in a porphyry system by looking at the rocks and looking at the alterations and so on. And then, eventually, after a number of years, BHP bought Western Mining predominantly for the Olympic Dam deposit. And that was when myself and the majors decided it's time to part company. And so I went off into junior land and started working with a group of guys that ran sort of a private consulting business and put together a number of listed companies, one of which was the forebearer of Alma Metals. At that time, it was privately owned. And I came on board and was part of the team that put that through IPO. In those days, looking for uranium and gas in the sedimentary rocks of the Karoo basin in southern Africa. And, we discovered a couple of small uranium deposits. But then as part of one of the sterilisation drilling programs on one of those in Botswana, we came across a very large deposit of coal. So instead of dropping the ground, we outlined 3 billion tonnes of coal on it. Took that through a series of feasibility studies looking at whether you could export it. In the end, that particular coal deposit was probably better aligned to a mine mouth power station. So we pursued that for a number of years with with some large-scale partners, including First Quantum Minerals, who farmed in on that project for a number of years. And then ultimately, First Quantum left for that, I guess, non-commercial reasons. And, we ended up getting that project back at a time when it's getting very difficult to fund coal projects, through the Australian equities market. So that's when we started really thinking about putting copper into that company.
Right.
That ultimately led to our decision to acquire Briggs. We then basically spanned the coal out into an unlisted public company, in specie those shares back to the shareholders, and renamed the company to Alma Metals. So that's what took us all the way from Africa back through to Australia and ultimately Queensland.
Right. So one final question relates to your expertise you've built up over porphyries over the years. So Tampican was a long time ago for you. What have you noticed about changes in attitudes towards porphyry copper in the years since that project?
I think it's very different depending on where you are. So if you're in North America, particularly say the Canadian market, they're very experienced in looking at projects of this scale and nature, because they've been exploring and investing in companies exploring in South America in particular for probably 4 decades.
Right.
So they're very familiar with large, low grade, copper systems, and they've seen grades go from 1% back in the sort of the halcyon days of early Escondida, mining their enrichment zones. But now, a lot of the large deposits are down in the 0.4, 0.5% copper and sometimes lower. And you're sort of seeing those sorts of grades now as start-up grades. And whilst they're significantly higher than we have in Queensland, you've got to remember that there's a lot less infrastructure there, and you're working up often 4,500 metres in the high Andes. So, your cost structures are very, very different there. But the Canadian market is very, very familiar. And that Australian market isn't yet familiar with low-grade copper. If we go back, say, 15 years ago, the Australian market also wasn't familiar with low-grade gold, and yet now we're very comfortable with
Absolutely,
it because we've been doing it for a number of years. And there's things like Cadia, things like Carlin the Bore in WA. Those sorts of deposits are showing that if you get your costs under control, obviously, the gold price going up helps. Then you can make a lot of money out of low-grade deposits if they're mined efficiently. We see exactly the same for copper, and it's just a question of time before that flows through in Australia. There's a lot of low-grade copper deposits in Australia that I think ultimately going to come online in the next 10, 15 years because they have to. We've got to have more copper. And you want to have copper in sort of tier 1 jurisdictions to help secure that supply. If you've got them in, non-tier 1 jurisdictions, there's always a little bit of a concern about security of ownership, what the fiscal regime is you're going to be operating under, and that can have a massive impact on a low-grade project where if somebody suddenly doubles the royalties on you, you've got an operating problem in terms of your cash flows. So, low-grade works well in tier 1. If you're in a non-tier 1 country, you probably need higher grades to offset the sovereign risk. You can do both. We've chosen the lower sovereign risk part of the spectrum because we spent 10, 15 years in Africa and understand that sovereign risk is a real risk, totally out of your control for most instances, and one we're as a management team have now decided to shy away from.
Right. Well, it's impressive. It's going to be a good 26, and obviously the lead into the further development after that. So, Fraser DeBitt, well done to you and your colleagues for bringing it this far. We commend our recent research to investors. Frankly, this is a bargain based on where copper is going at the moment and the rational pathway that the team's laid out. So, investors, do yourself a favour and go check it out.
Yeah, thanks very much, Stuart. Good to talk to you.
Thanks for joining Pitt Street Research.